All right. Hey, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays, coming to you live Thursday morning on the East Coast where the stock markets are open. We are bouncing up in the morning after a rough overnight session, and we're going to take a look at all of that as people trickle in. You know what? Let's just go to the charts. I'm going to do a quick look in the markets, then I'm going to talk about a couple of things, and then we'll get back into the markets. So just a very brief look to kick us off. Here is the S&P 500. I believe that's the futures market. Here's the S&P 500 cash market. As you can see, we gapped down at the open. Let me close that. We gapped down at the open, and we have been trading up, and we closed the gap this morning. Well, and because we closed the gap this morning, we are setting up a situation where the market could now turn back down. The candle actually just turned black, which means that you are now up versus last night's close. Here's the futures, and I'm going to zoom in on the 10-minute chart of the futures because I said something yesterday during the show where I put a red line somewhere here on a 10-minute chart. Probably back there somewhere. I'm assuming the red line's still there. Maybe it disappeared. Why would it disappear? That's strange. Strange that it wouldn't save it. That's weird. I believe I was using a 10-minute chart. I sent that chart to one of my group chats, so I can grab it from there. Strange that it's gone. Yeah, here it is. Very strange that it disappeared. Hold on one second. I have to do it through web, not through the app of Telegram. Really hate the app of Telegram, but it becomes kind of necessary sometimes. Anyway, I'm just trying to see where I drew that. Okay, so, or I can just pull it up. Nah, things are taking too long to load. I'm already wasting too much time. Nah, it's taking too much to load. Anyway, yesterday, I don't know, like I said, I don't know why it disappeared. But yesterday I drew this line in the morning of the market. And I said that if we fall below this line, I expect the market to accelerate down at least enough for a trade that you can set a break-even stop on. So that's pretty much what happened. Obviously, it broke that line, immediately went back up. But if you stayed patient, this happened after hours. So I would not have taken this trade at all because it's after hours. I was hoping this would happen, earlier in the day while the markets are still in open hours, but it did not because no one controls the market. And the moment it breaks, that's what happened, and that's a pretty steep drop. Now, of course, it happened in after-hours trading, but below that line, we ended up falling 40 points for 1.5%. That's pretty substantial for the stock market. We have, of course, recovered all of that and more, and we're now sitting right here. I don't know what happened in the last 10 minutes, but prior to 10:30, somebody said something. So normally, these aren't normal moves outside of, news events. So this is a 16-point up and down swing, 17-point up and down swing in 10 minutes. That's not normal. So somebody said something, and the market doesn't know if that's bullish or bearish. So you get one of these Darth Maul candles that knocks out stop losses on both sides. So we really got to wait and see. Right now on a 10-minute scale, you actually bounced right here at 8 in the morning, of course, on one of these nines, and you topped on one of these nines as well. Like I said, I only trade during open hours. I never trade after market hours, even though it's possible. I stay away from that. And right now, you know, on a daily scale, totally neutral. But on a longer term scale, like I said, I have stop losses in place on my short position above this week's high. So as long as we don't cross this week's high, I remain in my short position of the S&P 500, but my patience is eventually going to wear out because I am in the options market, and options have time decay. So if this trade isn't working out by end of next week, I will end this trade, whether it's in profit or in loss. That doesn't matter. All right, quick peek at Bitcoin, and then I want to talk about a couple of stories. And then we get back to the markets. Let's see how we're doing. We have 300 people watching. Nope, more, 450. So everything in Bitcoin is consolidating. So you really want to watch yesterday's video when I talked about the correlation between the stock market and the Bitcoin market. That's what's really important here. It's the correlation between the two. As Bitcoin continues to consolidate, we remain in this daily ascending triangle, which has potential of breaking out to the upside. The BitMEX funding rate is showing you that there is no speculation right now in either direction, and the leverage traders on BitMEX are completely neutral without bias one way or another. So that means it can go either way. We are holding the 50-period moving average, which is slightly leaning bullish, but the slightest possible bullish lean. And the stop and the lucid SARs or parabolic SARs are pointing to a bearish trade. We have consolidation of the longer term moving averages. Basically, you're consolidating, and you've been consolidating now for over a month, and you can consolidate for the rest of this month. So it's possible to consolidate for 2 months. And then if we do consolidate for 2 months and we are sitting near $10,000 going into July, I will probably be bullish at that point, because on a weekly scale, I continue to wait for a 1 to 4 candle correction. And if we consolidate for 2 more weeks, that will certainly fit the definition of a 1 to 4 candle correction. The CMF on the weekly chart is bearish. You have been rejected by the trend line. You have been rejected by momentum. You have been rejected by a Fibonacci line once again. So there's lots of things that have rejected it, but the longer we consolidate near the top, the more bullish the situation becomes. Okay, that's Bitcoin. Now I want to talk about this. Okay, I sent a tweet, got me in a little bit of trouble due to the way it was phrased. Look, I can't stress enough how dangerous trading is. And I've said that many, many times. Like, this channel has been around since 2016. And prior to that, I was on the World Crypto Network for about 2 years. So since 2014, I have been doing videos. And yes, a lot of the videos have to do with trading. I was doing less videos on trading at one point, but there is demand for trading. And one of the reasons I do videos about trading is because I try to teach people to trade responsibly. And I don't know how many times I've said that trading is dangerous and you should only do it if you know what you're doing and you're properly educated. And yet, anytime you want to teach people on how to properly trade and not end up in this position, you are called a scammer. So this is the part that really bothers me. Okay. Now, also, as far back as I remember, going back to the World Crypto Network, I have been very critical of Robinhood, even before most people have heard of Robinhood. I don't know how to find those random videos from 2014 and 2015 or 2016. I don't remember when Robinhood launched. So I don't want to say that I talked shit about Robinhood in 2014 when Robinhood didn't start till 2015, because I don't remember. But as far back, so since the first day I heard or I mentioned Robinhood, obviously it had already existed. I don't remember when that was. Could have been 2014, could have been 2015, could have been 2016. It doesn't matter. I have always been critical of the Robinhood app because I always saw the Robinhood app as being predatory to wheel in traders that don't know what they're doing, like young kids, for trading. The way I see the shitcoin space as being predatory towards separating people from their actual valuable Bitcoin. And I also commented on tweets like this that say, my son just told me that he can only play Fortnite games in the evenings because half of his squad started trading on Robinhood, and his son is 10. Okay, so there you go. I mean, it's possible that the 10-year-old is playing games with adults, but chances are a lot of kids are trading on Robinhood by like using their parents as KYC or something. Okay, so one of the things that I was all critical of Robinhood back in the day, one of the things that I was critical about Robinhood back in the day is their zero fee trading. So zero fee trading basically encourages more gambling. Okay, like the easier you make it and the more fun you make trading, the more predatory it becomes for young people that don't know what they're doing. And this is why learning to trade is important. And I don't care where you learn how to trade, but learning to trade from free Google resources is not a good idea. Okay, so all I can talk about is how I learned how to trade and how much it cost me. And it cost me $8,000. So it wasn't cheap. And the company that I learned to trade from ended up being sued for being a scam. Now, to me, they weren't a scam because they taught me how to trade. But what happens is people that didn't take the opportunity to advance their own education on their own decided to sue the shit out of this company over the years. And they ended up filing for bankruptcy. And they were basically, if you Google that company, they're known as a scam. But to me, they weren't a scam because I learned how to trade from them. But then I continued to study. So it's, to me, starting to trade with real money and real leverage and something as crazy as options. Options are one of the most dangerous financial instruments to trade. I don't know. I've stressed this many, many times. You want to read the story of long-term capital management, which almost blew up the entire financial system right there. Wikipedia is probably not the best of sources, but I'm not really a fan of Wikipedia. So maybe we can find something else. Investopedia is a little bit better. Anyway, read the story of long-term capital management. It was a hedge fund ran by Myron Scholes and Robert Merton, two of the people that invented the option pricing model. The third guy was deceased, so he wasn't in the fund with them. So options are incredibly dangerous. And when you read this article, they describe the potential, screw up in the display of Robinhood, which is bad on Robinhood's part. Again, this is all speculation because no one really knows exactly what happened. And Forbes probably should never publish this article. But like I'm reading it and I'm understanding what they're talking about. But at the same time, you need to know what you're doing so that if you see it, like I can tell you horror stories from my APIs. I started trading options before there were even phone apps. So I switched brokers literally to a broker that had the most up-to-date smartphone app, just so I can trade from my cell phone. This is back in like 2009 or something like that. 2009, 2010, when the first apps were coming out. And there was one time when I log into my phone app account and I'm literally inside someone else's account. And I'm looking at these positions. Now, if you know what you're doing, you would not panic. And so it's to me, I always equate trading to things like driving cars and playing poker. And like you don't just do these things. You don't just go into like high stakes poker games. I mean, you could if you have the excess capital. And you don't just get behind a wheel of a car and go race car driving without, proper education on how to drive a car. And it really kills me when people make fun of those that want to educate others on how to trade safely. And it discourages people from proper education. And this is where I wish Tyler Jenks was here, where eventually all of my videos will be free, eventually. But it does take effort. There is also a reason why your driving instructor is not going to be teaching you for free unless it's your parents. So yes, one of the first things I would be teaching my kids is financial responsibility. And if they're going to trade, they have to be properly educated to learn how to trade. And I don't care where you learn how to trade, but you have to learn somewhere. And all I can do is, help people as best I can. But everyone on the internet just wants to demonize the fact that there are some people that are actually trying to help people to prevent these situations. Meanwhile, they're making it out to being opportunistic. Trust me, I don't make much money because the amount of resources I spend to do everything I do is pretty damn high. My financial engineering degree did not teach me to trade. It actually screwed up one of the things, and I talked about it in my options course, where my financial engineering degree, I remember a mathematical proof why a European option is worth the same amount of money as an American option. And if you don't trade options, you don't know what the differences are. And because of that financial engineering degree, I entered a really big trade with the European option. And I was under the impression that it would have the same value as an American option. And I learned my lesson the hard way that it didn't. And that's correct. My financial engineering degree did not teach me how to trade because no one at that university that was teaching me financial engineering was a proper trader. They were all, PhDs in financial modeling and stuff. So no, the degree does not help. A university education on trading, as far as I know, does not exist. That doesn't mean my financial engineering degree was worthless. My financial engineering degree taught me a lot about financial markets, and the financial engineering degree got me a job in the financial sector. Now, in the financial sector, my job wasn't exactly trading related, but I was around hedge funds quite a bit. But then I had to save up money, pay for the trading education, because I knew that going into trading without that education was going to be a big problem. Just like I knew, getting behind a wheel of a car without proper training is going to be a big problem. Also, why I've taken training on how to shoot a gun, even though I don't currently own one, probably should. But yes, I have taken courses on how to shoot a gun, because that is what a responsible person does before they buy a gun. A degree in computing didn't teach me how to write computer programs. Well, I took computer science in college, and yes, a computer science degree does teach you how to write code. I will say that. And I needed those computer science courses because I'm happy that I took those computer science courses while I was getting my geology degree, I took a bunch of math and computer science, and that's how I was able to get into the financial engineering program. I've never taken a business class in my life. I've never taken an economics course in my life. Like I've never taken finance or economics or anything related to finance. But because I had the math background, the computer science background, I was accepted into the financial engineering program, which I'm kind of happy I completed. And that was not easy either, by the way. All right. So yeah, any questions, guys? That's my views on the markets. Oh, let's look at gold. So the market is kind of up. So gold is down. Gold was up in pre-market quite a bit. Gold continues to consolidate. I remain bullish gold. This is no different than my views on the daily Bitcoin chart right now. There's a big difference. If I flip gold to a weekly chart, here's a big difference. I see your question, Adele. I'm gonna have an answer. You may not like it. So you see how the weekly chart in gold is also consolidating at the high. It's not the all-time high, but it's like a decade-long high. The last time the weekly chart was this high was probably like 2011 or something, some ridiculous way back, 20, whatever this is, 2013. So it's been 7 years. So the weekly chart is consolidating at the high. And I don't see a big rejection line here. So 2 points don't make a trend line for me. They do if this thing fell big time, but the trend line was down here and it's been broken. So to me, the weekly chart of gold is also on the verge of being bullish. So the daily chart of gold is consolidating near, a 7-year high, and the weekly chart of gold is consolidating near a 7-year high. And that's why I'm bullish gold. Bitcoin is different. While Bitcoin is consolidating on a daily scale, just like gold, making me bullish on a daily scale, the weekly scale is at rejection resistance. So that's the big difference between the gold situation and the Bitcoin situation. Let's glance at oil. So oil is correlated with the stock market. And if oil continues to rise, I'm assuming stock market is pumping right now as gold is dropping, and it is. So stock market is pumping. So my stop loss on my short trade in the S&P, I may even exit my short trade on the S&P if we break yesterday's high. I would like to hold out till the week high. I want to hold it through the weekend to give it a chance because I'm just not trusting this market right now. And I would be careful with the market in the long side because there's nothing wrong with being patient. And I don't mind going long at 32.50. Because at 30, if we break 32.50, I'll be more confident that the market is going to go to new all-time highs. But right now, I am not confident that the market is going to go to new all-time highs. So to me, it's not about buying at its lowest point. To me, it's about buying with the highest probability of future success. That's more important than buying it at a low price. This is why in the world of Bitcoin, and I'm going back to the weekly scale. Actually, that's the monthly scale. This is why in the world of Bitcoin, to me, buying over here, even at $5,000, to me was a much smarter place to buy than buying a year and a half earlier at $3,000 as a trade. as a hodl position, if you've been in the space since 2013, that's when you should have been hodling from. And then you're in way earlier than 3,000 anyway. So, but as a trade, as a short-term trade, as an intermediate-term trade, even as a long-term trade, it depends on your definition of long-term. To me, buying at 5,000 here was safer than buying at 3,000 here. Plus, you have an extra benefit of a year and a half and an upcoming halving to give you more mental support, bring you more fundamentals. Okay, so there was a silly question. If I had to choose Bcash or BSV, if you have to choose one, which one would I choose? That's actually a tough choice. When the Bcash versus BSV fork was happening, I was on the side of BSV. And this is, there's a reason for this. Right now, here's my problem with Bcash. Bcash is pretending to be something it's not. Bcash is trying to convince you that they are a decentralized Bitcoin, but they're not. But they're trying to convince you that they are. So that's deception. BSV, the cryptocurrency BSV, doesn't have any deception. They are, of course, pretending that Craig Wright is Satoshi, but that's on a personal level. As far as the technology of BSV, they are not pretending to be decentralized. They are blatantly telling you that they are centralized. They are blatantly telling you that they will censor transactions. They are blatantly telling you that you need $20,000 to run a node, and there will only be a handful of nodes that would censor transactions. So to me, the technology of BSV is way more honest than the technology of Bcash. And this is the big distinction, is I want full transparency. And the technology of BSV, to me, is more transparent. Now, they're telling me that they are probably even worse than the US dollar with their transparency, and that's fine. I have the necessary information to make my decision. But to me, this is the same argument where I said Ethereum is more dangerous than BitConnect. And this is before BitConnect, imploded. Way before BitConnect imploded, I said Ethereum is more dangerous than BitConnect. And my argument was that BitConnect is so obvious as a Ponzi scheme. It's gonna implode very, very soon, and the BitConnect nightmare is gonna be over. But the Ethereum nightmare is gonna continue because people don't see the obvious scam and the incompetence of the Ethereum network. So this is why the Ethereum network was always more dangerous than the BitConnect network. And I use the same logic for Bcash versus BSV. Does escalation of India-China conflict influence the Bitcoin market? I did not know there was an India-China conflict, so I don't really have a comment, but thank you for informing me of it. I should look that up. Never heard of Wirecard. Is algo trading any good? Hedge funds nowadays hiring CS grads. Well, look, algo trading, I don't believe in artificial intelligence. I don't. I believe in faster ability to Google something. And a computer will do it faster than you. So I don't really believe, like Jimmy Song once said, AI is just someone's computer program. Just like a server is someone else's computer. So it's just a play on words. So to me, algo trading is automated trading. And does automated trading work? It depends on your trading strategy. If you code a good trading strategy, algo trading will work until it doesn't. Like, you can't own all the money. You won't. So every single trading strategy has a limit to where it's no longer profitable. So you code up a trading strategy, it will work on a specific time frame, and it will work on up to a certain limit. After that, it will probably fail. So if you wrote a trading strategy for daily time frame, you try to apply it to the 5-minute time frame, and it can lose you a lot of money. Also, this strategy on a daily time frame could perform really, really well, and then the market conditions change, and it can mess you up. Or the strategy is making so much money that eventually it can't make anymore, or it's making you money up to a point. Like I have some option strategies that will absolutely fail if my account grows beyond a few $100,000, because the advantage in the market that I do is on not so liquid stocks with options. So there is a limit to how much money you can put in those strategies before you can't get a good fill. And you need computer science grads to code these strategies. Again, like, I'm like afraid to promote anything at the moment, but the financial summit, which we organize in Bali in November, it tries to connect traders with hedge funds. So if you have a trading strategy, but you don't have the ability to code that strategy, one option that you have is to, join a hedge fund that has computer programmers and financial engineers like myself. When I studied that stuff, I mean, a financial engineering degree is the ability to code risk models or trading models. I was on the risk model side, which is why I try to teach people risk. And but there are quants on the trade side as well. That's what a quant is. A financial engineering degree is a quant degree. It's all similar stuff. Though quants is a term usually reserved for PhDs, I did not stick around long enough to get a PhD. I did not want to spend an additional maybe not 4. I did not want to spend an additional 3 years in my university after already spending 5 years in I spent 7 years in university. I didn't want to spend an additional 3. So yeah, your trading algorithm will only work as well as the trading strategy behind it, plus the coder that put it together. How do you think the dollar will collapse? In deflation. How will it collapse, and how will it affect the whole fiat currency? Guys, I'm not expecting the dollar collapse for a long time. I don't see a dollar collapse. Well, I see a dollar collapse potentially at the end of this decade. I just don't see a dollar collapse prior. I just don't see a dollar collapse in the beginning of this decade. I see it on the second half of this decade. How is Ethereum a scam? You have 8 hours to listen. Well, you can start by, what is this? Oh, that was me looking for my first shit talk about Robinhood from back like 2015 or whatever. So you can start by Googling crypto scam and the word Ethereum. Crypto scam is a podcast I used to do. And you will see several episodes, number 10, number 11, and number 8. So this was supposed to be a 4-part series. This was part 1 about the Ethereum launch. This was part 2 about the concept of smart contracts. And this was part 3 about the Ethereum technology. I never did part 4. I wanted to do part 4, Ethereum, crypto scam Ethereum, on the economics of the Ethereum token from an economic perspective. And I wanted to do it with Saifedean, but we never got around to it. Just because I want to do it with Saifedean doesn't mean Saifedean wants to do it. And so I never did part 4. The problem with the Crypto Scam podcast is it required a lot of research. And you can look at the Crypto Scam podcast series right there. It's a playlist. And let me pause that. So you can look at some of them. I did Ripple long ago. We can redo Ripple a couple of times. This was the last episode that I did. It was about, what do you call it? Barely Sociable's propaganda video. Oh, the video is going to come up over here eventually. But yeah, if I do if I do the next Crypto Scam episode, it will probably be about the company Crypto.com and the Monaco token and how that whole company started. We could also do one about Binance. I can also do one about there's a lot. Like at this point, I don't mind being controversial. My whole career in the crypto space has been controversial. So I don't mind doing Crypto Scam episodes on the project people think are legit. There's no point of doing Crypto Scam on BitConnect. There's no point of doing Crypto Scam on Hex. There's no point of doing Crypto Scam on blatantly obvious scam projects. The beauty of Crypto Scam is that it goes after projects that people don't think are scammy, but they are. S&P still moving up. Like I said, I'm still in a short position, and I'm comfortable with that position as long as we don't break this week's high. And if we go into next week, the same will apply. Whether we break this week's high today, tomorrow, or next week, that's when my position ends. The only unfortunate part about my short position is if on Monday we gap to the upside way above this week's high. That's the only concern. So the only way my trade gets in any real trouble is if on Monday we open at 3,300. That's a problem. Guys, like I said, I've never heard of Wirecard, so I don't know what that stock did. We can take a look. Oh, let's take a look at the Aussie US dollar. I have a lot of Aussie people watching. A lot of Aussies. So the Aussie dollar has been appreciating. This is the weekly scale. But as you can see, the weekly chart bottomed one candle, one candle late, unfortunately. And the top came a few weeks ago. So that's what it looks like to me. Wirecard. Like I said, I've never heard of it. German stock. Well, whatever they've been doing, they haven't been doing it very well. The stock has been falling since 2018. That's not good. That's as long as Bitcoin. And I don't know. Fraud was discovered. They announced a big loss. I don't know. But I don't trade. Like this is not a company I would be trading today. This is not my specialty in trading. My specialty in trading is getting out or going short right here, right at the high, because you can see the big red arrow. And, I got to solve my mouse situation. That on a new computer. People keep telling me, Tone, you don't need a new computer. You just gotta, redo settings on this computer. But I don't know how to do that. So I'd rather just buy a new computer with 48 gigs of 48 gigs of RAM, and hopefully that will solve all my problems. So would I have gone short on this arrow? Not as likely as this one, because there are huge differences between the way this is topping and this candle itself, and the way this is topping and this candle itself. This is a very bullish candle. This is a very bearish candle. So I am less likely to go long here. Sorry, less likely to go short here. And I'm more likely to go short there. And here is a beautiful opportunity to go long. And this is where I would have probably got out. And if I was long going into this, I probably would have exited that trade somewhere. My stop loss on this giant crash would have taken place. So that's my specialty in trading. I don't trade this. This happened in the middle of nowhere. If anything, I would have been short as of June 5th. And my stop loss on that trade would have been hit a few days ago, because that short trade would have been losing me money. And now I would be a little bit upset that I wasn't a short trade, that it got stopped out. But I'm not going to sit here and tell you I would have shorted here and I would still be short. That would be a lie. If I had shorted here, I would have taken my loss right here when this 2 went above this 1. If I didn't already taken a loss when this green 2 went above this green 1 and above the 9. So I might have taken my stop loss here. I might have taken my stop loss there. I might have even gone long here or there, possible. But I guarantee you I would not have been short going into today. And I would not trade this thing today. If I was long and this happened today, my stop loss at some point today would have been hit. Looks like this thing did not gap. So my stop loss would have been hit right there. Now, again, I'm about to get a lot of shit, but in order for you to manage your risk, you have to somehow learn how to do it. I don't care where you learn how to do it. And I plan to reteach these videos. In fact, do not buy this risk and position size management video or this entries, exits, and stop losses, because in about 3 weeks, I will be redoing these live as a single video, where I'm actually going to take a bunch of time and make actual real slides and make it more professional. Okay. So that's my plan, to educate people on how to properly manage the risk. I don't see how the NZD is going to be much different than, I just don't see how NZD is going to be any different than the Australian dollar. They're pretty much correlated. I don't even have the AUD NZD pair. So here's the daily chart. You can see there's reasons to buy the low. And there's reasons to get out right here. Maybe it's in consolidation, so I wouldn't be in a rush to get out, but that is a reversal candle. And there's clearly reasons to get out as this candle is forming, because it's telling you that, hey, your shit has probably topped. So right now, this looks like it's ready to drop. So to me, it looks like the dollar should appreciate against the New Zealand dollar. So the New Zealand dollar should drop against USD. Yeah, if Square is 2% from its all-time high, then I would be bullish on Square. I'm always bullish on any asset as it approaches new all-time high. So Where was the all-time high? Like, I would be bullish here. Like, now this is an unfortunate situation. See, this would put my style of trading into a very tough spot. Right here is when the daily candle goes to a new all-time high, and it's a green 2 above a green 1. And it's breaking the prior swing high from last year or from February. That makes me very bullish. But the fact that on a weekly scale, we are topping makes me very hesitant in going long. So this is one of those unfortunate situations where it's difficult for me to go long at all-time high. This doesn't normally happen, but when it does, I'm cautious. So what I'm saying is, on this candle, I would have been very, very cautious, and I would not have gone long. Now, that looks like the all-time high, but to me, this is good enough. And these are the kinds of things that are hard to explain. While the all-time high for Bitcoin is 20,000, Bitcoin getting anywhere close to 14,000 is enough for me, because the break of a secondary close to the all-time high is good enough. Like, for me, the break of this double top, both of which, you see, this is why I would be hesitant in going long right here on this 9. Because look what happened the last 2 times this same situation occurred. This candle is no different than how this candle began and how this candle began. And if you went long here or here, you got your ass handed to you. The move here and here was too short. And that is why it would have been very difficult for me to go long, especially since I've been dumbfounded by the rise in the market. If anything, I would have been short going into this week in Square. I would have looked at this candle last week and I would have said, holy shit, this thing is going to repeat what it did back in July and what it did back in March. Now, of course, if this is my first ever trade in Square and I use my entire account to short, I would never be able to trade again because I will lose all of my money. But if I am a seasoned trader and I made good money by going short here, after going long here, and then I went long here, and then I sold and went short here, and this is not enough for me to take the long trade, so my stop loss probably would have gotten hit, and I may or may not have been in this long trade in Square, and this is where I take the short trade, and this is where I take the stop loss. But remember, I have big gains because of this, this, and this. That's 4 big profitable trades before a losing trade. That's how I trade. That's how I teach people how to trade. But everyone has to make their own decisions. All right, I think we got some questions that are being sent to me. What are your thoughts on the Wyckoff distribution? I don't have thoughts on the Wyckoff distribution because I am not an expert at Wyckoff. I will show you this. Someone sent it to me. Sorry, I can't give credit because I may not remember who it was. And I sent it to my friend Socrates, who does know Wyckoff. I don't. I never studied Wyckoff. I don't follow Wyckoff. Wyckoff is not in my tool shed. You know, some people have every tool in the world, and some people only have the tools they use, like maybe a drill, a screwdriver, a hammer, and maybe 2 other things. And some people have 1,000 different tools. I only use certain tools. So here's something somebody sent me, and let me see if I can give credit to the right person. So this was sent to me by Mr. M. Pavlotsky. And here is a chart of Wyckoff, like the stereotypical blueprint. And here's what he did with the Bitcoin chart. I don't see a date there. I'm assuming this is somewhat current. And the thing is, I don't know if this is correct or not, because Wyckoff is not part of my expertise. It looks similar, But I'm not a fan of Wyckoff because to me, Wyckoff takes too long to develop. This looks like a daily chart. And I'm not a fan of this. I prefer my triangles. I prefer simplicity. To me, the Wyckoff accumulation has too many moving parts. This is why I don't trade it. I don't like it. Elliott wave, same thing. Too many moving parts. Too much discretion. Too much, what's the word I'm looking for here? Too much interpretation. So I have no opinion of the Wyckoff distribution and whether it's accurate or not. It's not in my trading tool case. Possible market crash after upcoming election. I don't think so. I don't see a stock market crash after upcoming election. This is a really long discussion. I don't know if I have time to get into it. This is already going on for an hour almost. I guess I can give you the short version. So there's two possibilities. Either if Trump wins, like what happened last time Trump won, lower taxes, better for business. So the market should be happy. And if a Democrat wins, then the Democrats are way more bribable. Trump is not bribable. So the stock speculators will see that corporations would be able to get their way and get whatever they want. So the only way the stock market would crash is if an outright socialist wins. So if the socialist that is blatantly telling you they're going to confiscate your money, property, whatever, like a Bernie Sanders. So a Bernie Sanders winning is bad for the market. I think the market will crash if Bernie Sanders wins. Because people that are voting for Bernie Sanders aren't invested in the market. People that are voting for Bernie Sanders are socialists that want to get your money. So the majority of the people that are going to vote for someone like Bernie Sanders are the ones that want redistribution of wealth. And to them, people in the markets and business owners are the wealthy, devils. So unless an outright socialist wins, the markets will act favorably to the election, in my opinion, of course. All right, let me get this Wyckoff thing off the chart. Will states resort to legalizing marijuana and sports betting to help recover from coronavirus effects? Absolutely. Absolutely. States will. See, that's the thing, right? The states that the states that are mostly affected by the coronavirus are more the Democratic states because they openly promoted looting with the protests and the riots. And California already legalized marijuana. New York already legalized marijuana. So a lot of these Democratic states have already legalized it. Look, I'm not all about the Republican views. I'm not all about the conservative views. I believe marijuana should be legal. I believe gambling should be legal. Like, I want to give people their freedoms. My problem with the Republican Party is the fact that they also want to take away your freedoms of choice on, your vices. But I have a bigger problem with the Democrats because they are trying to take over my money. That's the problem. Democrats go for your wealth. And see, if I get to keep my wealth, I have more options as to what I can do with my freedoms. But if my problem, I have a bigger problem with the Democrats redistributing wealth than I do with the Republicans, making things like smoking a plant illegal. I can live without smoking marijuana. In fact, I do live without smoking marijuana because I don't smoke. So I can live without certain things. I remember when betting became illegal across the US. I can live without betting, right? But I can't live without my money. Like I can't live in a socialist place where, like I wouldn't live in a, if you have options, that's the other problem. Like my family fled communist Russia. I don't want to live in in USSR. I don't want to live in, what was communist China. I don't want to live in the current socialist regimes like North Korea or whatever. So I would rather live in a country like a Singapore, where I have financial economic freedom, even though I can get the death penalty for smoking a plant. I will choose, living in Singapore, knowing that if I smoke a plant, I get the death penalty, than under communist Russia, where I'm allowed to smoke weed, but I don't have control over my own money. Well, like you got to choose, unfortunately. I want the best of both worlds. I want a place like Singapore that also allows you to gamble and smoke cannabis if you like, right? But I don't rule a country, so I can't create the tone-based perfect utopia of financial freedom plus personal freedom. Tried to mute, but I didn't pull it off. All right, I got 3 more questions. Can you please look at the South African rand? Sure. I actually really want to go back to South Africa. I really do. I don't want to say my time in South Africa was cut short. I was leaving South Africa for Zimbabwe around the time that I left South Africa back for the US. But I do want to spend more time in Cape Town. Really enjoyed it. Yeah, it's not looking good. This is the weekly chart of the rand. While I would have thought that you had a little more momentum, it looks like the US dollar is turning, guys. Looks like the US dollar is ready to rise. It's possible the US dollar has turned. And if the US dollar has turned, all of the shit fiat versus the dollar are going to drop. So someone is asking when the indicator is available. So I am restructuring many things, and there's going to be lots of changes upcoming, especially with the indicator. And it is available once again. I have rewrote. I'll tell you exactly. I'm very transparent, guys. One of the tone-based problems is that tone-based is too honest. So please read the new description, and I will probably be changing like the spirit of the TI indicator will remain. I have not released the multi-time frame yet. It is back on sale. I took down sales for like a month or so, but it is back, and there's going to be changes coming. Many changes coming. I don't even want to say what they are. And this indicator is going to be different. The value that the indicator provides will not be different, but there will be changes coming. I don't want to talk about what they are, but for the time being, it's back to being available, but not the latest code upgrade, maybe at the end of the month. But you will get the code upgrade when it comes. All right, let's back. I really care about the S&P right now. Like I said, I am still bearish in the market. The 10-minute has turned. Would Tone Vays have been able to time this top in the S&P? The answer is no, I would not. Would I have been able to time this bottom in the S&P? The answer is yes, I would have. Just like I would have been able to time this top, even though this candle would have been very, very frustrating and may or may not have got me out of that short trade for a loss. But I remain bearish, and everything I said yesterday holds once again. If the S&P goes below this area, if it goes below 3090, I expect it to accelerate down. This is my style of trading. Now, how to properly enter and exit this trade is A, practice and experience, and B, education. Now, notice how I put the line on this low and not this low, because this low is so close to this low. Once we break this low, we create a new double bottom, and you guys know what I think about double bottoms. They tend to be broken, not as often as double tops, but on a short-term scale with a 10-minute chart, very likely. All right, last question. If Bitcoin is worth 10,000 and it goes to 20,000, where and how can it double its market value so quickly? I don't understand the where part. How can it double its market value so quickly? Well, let's go back to my Twitter. And like I said, I discussed this earlier. So if I go to my profile, and if you look at the last tweet I sent, I should probably pin it. This one. I'm going to pin this. I was really waiting for this tweet to get 1,000 likes, and I came so close. I got to 976, but it's time. So I'm going to pin this. God, I hate the fact that Twitter has like 2 different places to click on. I always forget which one does what. Twitter, terrible UI. Hopefully the sound is turned off. No, that's not what I wanted to pull up. All right, again, wasting valuable time here. All right, so here you go. How can Bitcoin double from 10,000 to 20,000 quickly? Well, let's talk about our recent punching bag for the right reasons, Robinhood. So here are Robinhood users buying up the bankrupt Hertz company. And here they are lifting the price of Hertz from what looks to be a smidge above zero all the way to $6 because kids on Robinhood are buying into a failing company like they're Warren Buffett. Okay, so yes, this is how it can do it. And yes, it can do it at the low, and yes, it can do it at the high. So now if I pull up, say, Tesla, how did Tesla go to a new all-time high at $400 and then a few weeks later was trading at $1,000? Well, because when stocks break prior all-time highs, FOMO sets in. Okay, that's Tesla. And this is why I like buying when things break all-time high. So breaking 10,000 is not enough for me to anticipate a giant move to 20,000. I think it'll be a slow grind to 20,000. But once we break 20 or once we break 15,000, then it can accelerate quickly. All right, guys, I need to get going. This has now gone for over an hour. Once again, please rewatch my statements about this unfortunate tragedy of a 20-year-old trader using Robinhood. And like I said, Forbes probably should have never published this article. And lots of stuff on Twitter are, of course, taking my views on the situation out of full context. Okay. Thank you all so much for watching, and I will talk to you all on the next one. Bye, guys. Trade safely.